afternoon, everyone. My name is Saranthi Gongpawat. On behalf of SIAM Cement Public Company Limited, I would like to warm welcome everyone and thank you for attending our year-end 2023 Set Opportunity Day. And we appreciate your time and interest in our company performance. I have the pleasure of introducing our senior executive from SCCC who will join us today. Kun Ranjan Sadewa, Acting Group CEO and Group CFO. Kun Montri Nitikun, CEO Thailand Cement Business. And today, the following topic we will cover on the presentation. We'll be starting with the key highlights. And second is financial performance, then ESG and 2024 outlook and way forward. After the presentation, we will have Q&A session. So let us begin the presentation by inviting Kun Ranjan to begin the presentation.
So the key highlights for Q4 2023. Overall, I must say we have had satisfactory or rather more than satisfactory Q4. While top line was slightly lower than our expectations, however, both our EBITDA and net income were higher than Q3. And this was coming from low input costs, energy costs primarily, but also all the initiatives that we undertook in Q2 and Q3 on fixed cost reduction, structural fixed costs, that came as a benefit in improving our EBITDA margins in Q4. Talk about Thailand in particular, as we had mentioned in the previous meeting as well, we started a FIT program in Thailand, which gave us benefit on our EBITDA margins, also helped by low energy costs. However, towards the end, or let's say in November, December, we started to witness a lower demand, and which impacted also the selling prices in Thailand. Vietnam starts to show some signs of recovery in Q4. We have had roughly 19% higher volumes compared to Q3, which indicates the demand coming back, albeit still lower than the run rates in 2022. Sri Lanka continued to grapple with the challenges that arose from 2022 sovereign and financial crisis. On top of that, Q4 in Sri Lanka witnessed one of the highest rains, which hampered the construction activity, together with ongoing price competition in the market coming from much higher capacity installed in the recent times. In terms of sustainability, we have made significant improvements in 2023. So overall, we achieved a 3% CO2 reduction from 2020 baseline, as was planned earlier, and our TSR improved from 16.4 to 21.2%, a 22% improvement, and a 29% improvement. At the same time, clinker factor decreased 3% from 2022. We also kicked off one of our biggest initiatives on solar farm installation on our lands in Saraburi in a joint venture agreement with Green end of 2023, and we are making progress to start that project in 2024. This is a significant move towards our ambition to achieve 50% of our electricity consumption coming from green power, and this is one big step in that direction. And this project alone will contribute to approximately 10% of our power consumption in Saraburi. And in addition, it gives us CO2 reduction as well at the same time of about 44,000 tons. Let me move to the financial performance in Q4. As I mentioned earlier, we had a slightly lower top line coming from lower volumes in Thailand, also in Sri Lanka primarily, and lower prices. However, better cost management and lower input costs meant that our EBITDA margin improved from 18% to 24.5%, and likewise for the net income, net profit, and net profit margin. Q4, we were able to garner the benefits on net working capital initiatives we started already in Q2. As you may recall, we have had huge clinker and coal inventories built up due to lower demand and also lower production as we shut down one of our kilns due to lower export demand in 2023. And then we took a number of initiatives to manage the inventories and also collections, which means we have had a much better free operating cash flow in Q4, as you can see. And we closed the year with a very healthy cash of about baht 6 billion. This gets reflected in the reduction of net financial debt. As you can see, our gearing went down from 58.1 to 47.7%, and going in the direction of our target of keeping the gearing around 40%. So as mentioned just now, together with a healthy cash of 6 billion beginning of this year, end of last year, together with unused committed loan facilities of 9 billion baht, and over 25 billion uncommitted facilities, we have enough liquidity and low risk as far as liquidity is concerned. Even on the group debt profile, as you see on the right-hand side, it's highly manageable in terms of the debt repayments. This year, we will have a repayment of 4.5 billion Thai baht bonds, which are maturing, and we have already secured a long-term loan of the equivalent amount, and the bond would be repaid in Q1 and Q2 this year. So based upon what we see in terms of the risks continuing this year, 23, when we started, we felt COVID is behind us and the markets would be better, the demand would come back. Actually, it didn't happen. We saw clinker export markets collapsing. We saw a significant decline in the demand in Vietnam, nearly 40%, and Sri Lanka, also the demand and both prices fell significantly. So we see a slow recovery in 24, even though better than 23, definitely, but not as it was foreseen earlier. So considering that, the board has announced a dividend of 7 baht for year 2023, which still is within our dividend, our let's say policy dividend payout ratio. It exceeds 70% and giving a yield of over 5%.
Next will be financial performance by Geography. Khun Montri will share us on the financial performance of Thailand.
Thank you, Khun Srinthip. So the demand overall, for the Thai market, I would say that is quite stagnant. So the demand dropped from 2022, 32.7 down to 32.1 million tons, in last year. So the majority, especially in Q4, this is have the impact from the lower demand, in infrastructure projects segment, mainly because of the delay on the government, the budget approval by the new government. So that, is will impact to our concrete business, And in the meantime, as well, we see that in the residential segment, this one also is quite soft demand as well. This is due to the higher interest rate and also the conservative lending practice, of the financial institution. So overall, for the light building material as well, similar to concrete business and cement business. As a result, you may see at the top right on the revenue. So the revenue dropped Q on Q around 10% and also dropped from last year Q4 in 2022. That is around 21%. Mainly beside those domestic demand quite soft, but also as Khun Ranjan said, we made decision to mothball one kilns. So this is to manage and balance between demand and supply. So we focused on the good margin to export to outside, rather than to carry on like the past, when we export 3 million tons and above. So according to last year, we export only 1.4 million tons. So that able to manage. And as a result as well, you may see at the bottom right, so we delivered a better performance in Q4. And this is 13% improvement Q on Q compared to Q3 last year. And even better compared to Q4 2022, that was 172% improvement. Thanks to the key initiatives from thermal substitution rate, we able to improve from 11% up to 16% for the Thai operation, the cement operations. And for the clinker factor reductions, we did a great job, able to bring down from 81% in 2022 down to 76% in 2023. And thanks to the FT price, the electricity price down, in Q4. So that's why we enjoy with a higher profitability. And last but not least, because of our key initiative through these Fit Plus initiatives, so that we able to manage our costs and everything that we able to control, better than Q3 and even compared to the previous year. So that's overall, for the Thailand performance. Thank you.
Next will be Vietnam. Overall of Vietnam for us.
So as previously mentioned, we observed the demand coming back in Q4, still not at the levels of Q4 in 2022, but 19% better in terms of volumes in Q4, which is a positive sign. Price of cement and clinker products remained under pressure due to oversupply and intensive competition. However, the margins improved because of the initiatives on the production side as well as on the structural fixed cost side, leaving us with a nearly 18% margin in Q4. Sri Lanka had a rather challenging Q4, struggling on the demand side, also aggressive competition. As you can see on the left-hand side, the capacity installed is now over 13 million tons, and the demand is 3.3 to 3.6 million tons. So it's like 1:4 nearly. This means all players want a share of wallet, and prices stay under pressure. Yeah. Bangladesh Q4. The demand side was okay, even though there was a pressure on the input costs. And as you can see, the profitability was lower in Q4. This is not from operations alone, but also some write-off of old items or provisions where there was no significant process improvement coming from 2020, last 2 or 3 years. And as a prudent practice, we decided to write off and hence impacting our profitability. Cambodia continues to see an economic slowdown and also heightened competition. As you can see, new capacity is continuously being added by the Chinese players in Cambodia, which puts even more pressure on the pricing side, together with lower demand as foreign Chinese investment in the infrastructure dries down significantly post-COVID in Cambodia. And Cambodia's own economy, the exports to the Western world, slow down, which means the overall economy has a slowdown impact.
Next is ESG agenda. Kumari will go through CO2 emissions.
Thank you, Khun Srinthip. So let me walk you through our ESG story. And first, I'd like to show you our group CO2 emission target. I think according to last year, we able to reduce further the CO2 emissions. This is compared to the baseline in 2020. We able to reduce 3%. We achieved CR603 according to last year. Supposed to be better than this figure. This is mainly because of the country mix. Because of Thailand, we contribute the most of the volume. So in Thailand, our B2B segment or the bulk segment, is around 70%. This is the big chunk, and then this is the product where higher CO2 emission. And when compared to those countries like Vietnam or Sri Lanka, the retail segment still as a majority. So that's why when the demand drop in those two countries, so when we combine together, so seem that we deliver is quite lower than we expected in terms of the CO2 emission. But I would say that that, in fact, we should see already, lower than 600 of this CO2 emission, and big thanks to two initiatives. One is TSR, or thermal substitution rate, and also the clinker factor reductions. Let me walk you through for the next slide on the thermal substitution rate. The TSR as a group, you will see now, this is very big improvement compared to 2020. So this is almost double, in terms of the performance. We jumped from 11% now up to 21% according to last year. And even you compare with the year before in 2022, so this is 29% improvement. So this is the big contribution by all countries we operating in. And looking forward in 2030, we put the high target at 40% to achieve this kind of figure. Beside the RDF, we as well looking for the biomass. So we expect that biomass will contribute on this achievement. We still confident on that our journey. And next one on the clinker factor. This is similar good improvement as I show you on the TSR clinker factor. This is another good story, and we're able to bring down, from 2022 about 3%. This is now from 74.7 to 72.6%. The key contributor from Thailand. Thailand alone, as I mentioned earlier, so we're able to reduce from 81% clinker factor to 76%. This is the two key initiatives contribute to that. First, thanks to the sales team on converting our product from OPC to hydraulic cement. And according to last year, we already achieved 70% of our B2B segment and already 100% convert from OPC to hydraulic cement for the bag segment or the retail segment. So that's the great achievement for Thai team. And also thanks to the new technology of the separate limestone grinding, so that we able to reduce our clinker factor. In the meantime, we as well able to control our good quality. It's very consistency when we control. Last but not least, on the ESG projects, as Kun Ranjan mentioned about the solar farm project. We're talking about the solar farm project on the land adjacent to our cement factory, 350 rice. And this is going to reduce the carbon dioxide emission around 44,000 tons annually. And this is an iconic project for our in-sea people. This is the great project we done so far. And when we're talking about the renewable green power, we already achieved 26%, mainly because of our waste heat recovery projects. And this is going to contribute another 10% on top of the 26%. So by end of next year, we aim to achieve 36% of our renewable green energy. So thanks to the solar farm projects. And this is to support our in-sea sustainability 2030 initiatives. And last but not least, this is the great project. We work together with Big Green. We are going to set up the JV company. We will contribute on the equity share around 75% and 25% belong to Big Green. So we have signed MOU since December last year. So now we are in the process, to do on the next step to set up the JV company. Thank you.
Thank you, Khun Montri. Next, Khun Ranjan will give us 2024 outlook and way forward.
So keeping control of the time, I'll be rather quick here. So go country by country. Thailand, as Khun Montri also mentioned, due to the delayed approval of the government budget and still very high household debts, we see a lower offtake of construction materials in the first 2 months of this year, and it might continue till May of 2024. Lower demand always means pressure on selling prices, and that we witness as well. And at the same time, the uncertainty on the energy cost still remains, both electricity and coal. Vietnam, we believe the real demand would come back to the 2022 levels in H2, while we continue to see challenges on the pricing side in the first 2 months, and demand not really growing. Also, there are 10 holidays in February for the Chinese New Year. Usually the demand picks up after that, and we have yet to see how it plays out. Sri Lanka shows the signs of recovery, the macroeconomic indicators. The GDP is going to grow for the first time. Inflation and interest rates are below 10%. There used to be like 60-70% inflation, and interest rates were about 20% plus. The Sri Lankan rupee has been fairly stable. The government is on track in implementing IMF's recommendation. So all these are positive lead indicators for the Sri Lankan economy to push the demand for construction materials, and we are quite optimistic on that. Even though it may not immediately, the demand may not come back to 22 levels, but at least we start to see an uptake on the cement demand, especially on the housing, especially on the housing side. Bangladesh, after the elections beginning of the year, we expect the demand to either stay stable or slightly go up should the projects announced by the government start to kick off already in 2024. Cambodia, more capacity will come within 2024, a few million tons, which would mean more intense competition on an already sluggish economic growth in the country, driven by both global demand for exports as well as lower economy growth means lower money in the hands of the people. So that's country by country market outlook. I just want to close by saying that we have had a lot of success with our Fit Plus project in Thailand, which we did last year. From January this year, we have rolled out a similar project across all our businesses. And this project is basically the way we run it is to look at our all components of variable and fixed cost and optimize operations and make them lean as possible and reduce the fixed cost, to the best-in-class benchmarks, so that we can maintain or improve our margins, even though the top line may not grow in 2024.
Thank you, Ranjan. So this is the end of our presentation. Next will be Q&A session. So let me start first question from online submission. Ask about are there any projects scheduled for 2024?
Okay, so 2024, we do not have any major rationalization project. As you recall, we had mentioned earlier that during Q2 of 2024, we will start the expansion of Hong Chong 2 kiln line in Vietnam, which may not happen in Q2. We will review it in early Q4 if we get the approvals and if it still makes sense to start the project this year. We are focusing on our normal CapEx maintenance activities. The only projects we have for 24 are what Kunal mentioned about implementing the solar farm. It's a very big project, about 2 billion baht total investment in a joint venture arrangement with Big Green. This is ongoing. The activities are ongoing, and we plan to start getting the power in Q3 next year. The other project which we will start this year is the formation, or let's say setting up our quarry on the land we purchased many years ago in Chonburi. We see the demand of aggregate materials going up, and we start ahead of the demand coming to prepare ourselves to make this quarry operational.
Thank you. Next question related to the dividend. The question is that why is SCCC paying lower dividend in 2023 despite higher profit?
Yes, good question. And as I mentioned earlier, we have been pretty consistent in paying our dividends 8 to 9 baht. This year, we have announced 7 baht dividend based upon our assessment of the external environment and uncertainties, both on the demand and input cost side. As we explained, we see a slow demand in H1. Having said that, should we see a good H1 performance, we will propose to board to consider an interim dividend in the board meeting in Q3.
Okay. Next, can you provide more detail on the internal cost reduction program that contributed to the improved overall performance in fourth quarter 2023?
Yeah, so like we mentioned earlier, this program is called Fit Plus, and this program is in last year we started with our cement business, as Kunal explained earlier, and this program runs across all cost lines and revenue as well. So it's a people-driven initiatives in different parts of our business. So let's say on the commercial side, on the manufacturing side, but also on the support functions, fixed cost optimization. So it's a CEO-led program in each of the companies, and basically we challenge ourselves and think out of the box, do the benchmarking of each of the performance indicators. For example, are we best in class on clinker factor? Are we best in class on TSR and electrical energy consumption and thermal energy consumption and so on and so forth? And we look at productivity, benchmark it, and then we take actions in terms of either restructuring or reorganizing, and that's how we are able to, in terms of if you say fixed cost per ton of clinker produced or fixed cost per ton of cement sold, we become leaner and leaner, and that translates into as fixed cost and SG&A as a percentage of net sales becoming smaller.
Ranjan mentioned about restructuring cost. So the next question will be related to this. Will the benefit from cost restructuring in 2023 impact further in 2024?
Yes, it would. Yes, it would, and we would like to inform that we would continue to look into our structured and other cost lines in 24 as well, because we believe that it's a continuous process to get better and better. So on one hand, the benefits from restructuring in 23 continue. However, to further improve our margins, like I said, we have extended the Fit Plus across all our operations with our experience from last year, and this is last year we had to take some help from third parties to help us organize. This year we are doing it all by ourselves with our internal teams, and we are quite proud of what we are doing right now.
Okay. So next question. This is about domestic cement sale volume. Could you elaborate on the factors influencing the decline in domestic sale volume and price in Thailand, and what strategies are in place to counteract these challenges?
Yeah, thank you. So as I mentioned just now, we need to split into main portions to understand the Thai market demand on the infrastructure projects. So this is more on the B2B segment. This is we get an impact at least for the first half of the year, mainly because of that delay on the budget approval by the government. And the second part on the retail segment, when you heard about the household debt, so that also impact to the buying power from the user. So that also another impact on the retail segment. So overall, I would say that first half, perhaps we will get a tough time and a challenge for every players in the industry, and we can expect a better demand in the second half of the year when the government release the budget, so that it will expedite those construction projects and the new launch from each one. So that overall, and to make sure that we still deliver the good performance. We still continue this year, with the Fit Plus initiatives. So on top of Ranjan mentioned just now, we very much, to motivate our people, it's more on the agility mindset and to raise the bar up always, on the target. So that's why we do the tracking, in terms of performance, not bi-monthly, but bi-weekly. So that is, we make sure that everyone will concentrate, to deliver the good performance. Yeah, thank you.
So as Kun Mundri mentioned about budget approval, so there is a related question to the government budget approval. What is your plan after the government budget approval? Maybe it's quite general, but Mundri can have any idea on this stuff.
Well, we're looking at the market by market. We so-called, we need to go down in the micro marketing and the micro strategy. So it's not mean that we're gonna aim, the same figure on the market share, but I would put the word, deserve market share. In some market, we can step back a bit, to improve our price, and we need to sacrifice a bit in terms of the volume. But in some segment where we are very strong, so we can aim more on the volume and then sacrifice a bit in terms of the price. So all in all, how we gonna maximize the revenue? So that should be the name of the game for this one.
Like another thing is we talk a lot about cost reduction. So there's the question that do you expect that the overall cost will reduce from 2023?
Yes, yes. The overall cost, in terms of if you're saying fixed cost, we are making efforts to reduce it from previous year. In terms of input costs, as we all know, the energy prices have come down from 2022, 2023. However, they're still higher than 2021 levels. So we do hope that they stay range bound or even come further, which will have an impact on our overall cost of clinker and cement produced.
Another question is related to trading business. So the question is that I saw that trading business revenue is decreasing every quarter. Could you explain why?
Yes. So our trading business was set up primarily to find markets for our excess clinker in Saraburi. Second, they were also helping us source coal and other MIC, as we call them, mineral components like slag, fly ash in other countries. So as you recall, in 2023, the export markets completely collapsed. We were doing up to 3 million tons, and as Manmohan mentioned, we barely did, half of it or even less than half of it. At the same time, there was no opportunity left, or let's say without risk, for the trading company to do third-party trades on coal or mineral components. So we decided to slow down the activities of the trading company and do some restructuring in terms of how this company was working earlier.
Okay. The next question is again about the price competition. That is a question that how can you tackle the intense price competition? Maybe in Thailand or
yeah. So in general, this is about demand and supply. We have the very details in terms of the market analysis, market by market, area by area. So that's why, we come up with the key initiatives, try to avoid, price erosion. So we always, looking at our premium position in the market. So that's why, we need to be careful, not launch any fighting brand product to the market. So that is to avoid, the price erosion. And we as well try to strengthen our service. We serve more in terms of the technicians, do the demonstration projects by projects, so that we're able to serve better service and also able to maintain our good price level. So that in general, I would explain. Yeah. Thanks.
So this same thing applies to our other operations in Vietnam, Sri Lanka, Cambodia, Bangladesh, where the quality of all the products that we supply, both ready mix and cement, as well as consistency of the application of these products in the construction process. And if there's a lot of technical support, and we have a lot of technical people as a part of our commercial teams to support the masons and even large projects in terms of improving the workability or construction process of the construction companies. So this is almost like, it's not that we just supply and then our job ends there. It is a much longer association, also in continuous R&D as well in terms of applications of our various products.
Yes. We have 4 minutes left. Maybe this is the last question, and that already submitted to our chat box. About one-off expense next year. Will there be any major one-off expense in 2024? It's hard to.
I should say that we don't expect. Last year, as we said earlier, we did a lot of restructuring on one hand, so we had one-off expenses. And then we also took the opportunity to clean up our balance sheets, of any old assets or inventories, lying which are unutilized, stores and spares. Some impacted above the line, EBITDA line, some impacts came below the EBITDA line. So we have fairly cleaned up our balance sheet last year. Should we have opportunities? So there are no one-off impacts coming from that part. However, if we find opportunities to further restructure and reorganize, there could be some associated costs which might come during the year, but we don't see at this stage any significant cost coming in this quarter or coming quarters.
Thank you. So since there is no more question, so any question, please feel free to contact us or send email to our IR department. So for today, we would like to thank you all of you to participate in our meeting and hope to see you again next time. So thank you very much for today, and thank you all the senior management to join us today. ขอบคุณค่ะ